Hello everyone, welcome to DFG Trader Vision channel. Today I will share with you the market analysis and forecasts for the coming week. What I will tell in this video includes my personal comments and forecasts. It is not within the scope of investment advice and investment consultancy. Now let's look at the price movements that may occur during the week and the targets we will determine. I will start my first analysis with the gold market. The price has been in a constant upward trend for the past few weeks. Those who were in a buy position made quite a profit from this situation. Gold is very close to seeing its historical peak. There may be many opportunities during this next week. My personal opinion is that the price will go up to $2,800 and above. However, these levels are not the final levels. There may be many changes during this week, because there are important high-impact news events this week. In this case, I recommend that you do not rush and even stay away from risk until the Fed interest rates are announced. Another target is the price level of $2,735.90. However, this target in the low oscillation can be confirmed by closing the imbalance areas seen in the 15-minute time frame with a voluminous candlestick. This is also called fair value gaps. Then, sell-side positions can be sought with the setup that will occur in the session intervals. If the imbalanced price gaps do not close and the price does not break the low oscillations, I think the price will continue to rise to $2,800 and above, that is, the bullish market. Now let's move on to our other analysis. This analysis we will do is the dollar index analysis. The dollar index provides us with important advantages so that we can accurately predict the transactions we will make in currency pairs. The dollar index creates a correlation for many major currency pairs such as euro-dollar, GBP-USD. These correlations also include gold parity and stock indices. However, due to manipulation effects, they are subject to correlation in very few session intervals. The main issue I want to explain here is this: if the dollar index is falling, the dollar and financial products tied to the dollar currency are losing value. If the dollar index is rising, the dollar and financial products tied to the dollar currency are gaining value. Another example is as follows: the dollar index is in a downward trend. Therefore, your USD and GBP-USD are in an upward trend. That's all. Now let's look at our price analysis. I predict that this index will be in a downward trend, albeit for a short time. Let's not forget the high-impact news event that will open this week. The fluctuations that occur between the prices may not meet expectations. Therefore, it would be more correct to approach cautiously. From this perspective, I think that the targets will fall below 106,698 and 105,420 points as long as it does not close above the 108,800 scoring level. This shows us that the USD and GBP currency pairs may be more prone to rise. With this narrative, let's move on to the USD and then GBP analysis. We can see the same price patterns in USD as we see in the dollar index. The targets here will be the liquidity levels seen in the same way in the uptrend. My basic prediction is that the price will first go to the 1.06300 level and then to the 1.08250 levels. But there is another liquidity structure that I need to show here without skipping. I think the liquidity level seen in the 1 hour and 15-minute time frame will be a trap. If I were looking for an uptrend position, I would expect it to clear this 1.04635 liquidity area. I know that this alone is not a sufficient rule. However, it is important not to risk capital during the Fed interest rate decision week. However, I look for an uptrend position in the session range that I can trust after the liquidity is received. In these days of economic uncertainty, even 1% can sometimes be a very big risk. Know the risks and protect your capital at all times. This is the best advice I can give you. Our next analysis is the GBP analysis. GBP is one of the dynamo stones of currency pairs. I say this because the price volatility is more dynamic and active than other currency pairs. Other than that, there is no extreme feature. The targets on the time frames are as shown. The price levels I expect to come during the next week are the 1.25760 and 1.27300 price levels detected in the daily and 4-hour time frames. Other levels to watch out for are that we should not see volume candlestick closings below the 1.24000 and 1.23760 price levels. The most important session range for PUS is the London session range. Pricing is more effective and has more volatility in this session range. You can achieve successful setups by keeping this in mind. Now let's move on to the other analysis. We will examine the most important financial instruments of the United States, NASDAQ and S&P. NASDAQ, it forms the average stock index of the 100 most popular and highest-yielding technology companies in the United States. S&P, it forms the average stock index of the 500 most popular and highest-yielding retail private companies in the United States. These two financial products have both futures and CFD contracts for difference market pricing. The pricing of the CFD market is the creation of a widespread range applied by brokerage firms and also spot pricing. These CFD indices are suitable for retail traders residing in countries outside the United States. Futures indices are the type of market service provided by brokerage firms for large investors and retail traders residing in the United States, which are regulated by certain laws with central authority. After making this necessary explanation, we can now start the price movement analysis. As seen on the screen, NASDAQ and S&P have full correlation. Correlation provides us with the necessary tools to analyze the connection between two or more markets well. Some of these tools are divergences. If we examine both markets in a 4-hour time frame, we see imbalance in the low swings of the price or, better defined, the divergence between the two structures. This shows us that low liquidity is clearing in NASDAQ and that the price is having difficulty moving downwards in S&P. It can provide us with a bullish position advantage in the coming week. This week, I shared my predictions that NASDAQ and S&P 500 may be in an upward trend. My target price levels are 22,200.00 and 22,450.00 points for NASDAQ. For S&P, it is the 6,178.75 point level and the 6,200.00 level range. I think it will be useful to remind you again. Avoid making risky transactions on high-impact news event days or weeks. This is an important warning for your psychological health and capital. We have come to the end of another video. This video was created by DFG Trader Vision. Thank you for listening and watching me. Stay healthy until I talk in the next video.